Welcome to Integro Talks, a podcast series brought to you by Integro Advisors, where we dive into the world of compliance, risk management, and due diligence, and provide you with expert insight and analysis to help you make more informed business decisions. Welcome back to the podcast. Thank you for tuning in once again. I'm your host, Alberto de la Portilla. Today, we're going to talk cryptocurrency. Crypto backers have long argued a solid case for the existence of digital assets. In these inflationary times, protection from inflation, for example, or not relying on centralized financial institutions. So if another financial crisis occurs, as it did in 2008, funds invested in digital assets will retain their value and appreciate actually as an alternative to traditional currencies. And another benefit that at least surrounds a general narrative around digital currency is the anonymity and the privacy that cryptocurrency transactions offer. But this also gives a path to bad actors to take advantage of the use of digital assets. Bad actors who are interested only in laundering proceeds from illicit activity due to wanting to stay underground. There was a recent article by the published report by the United Nations that said that crypto is a staple of the underground economy. Now, that report was focused more on Asia, Southeast Asia, but last week we saw there was news that U.S. prosecutors charged Sinaloa cartel members with laundering more than $50 million and working with Chinese nationals that are living in the United States. And these Chinese nationals were, one of the things that they were doing was purchasing cryptocurrency in order to conceal the proceeds of that illicit activity. We've also seen sanction-related activity or violations or efforts to evade sanctions and Russian sanctions by Russian entities and Russian individuals using blockchain-based services, enabling virtual currency payments that are meant to circumvent sanctions. Yet a recent study by Chain Analysis concluded that illicit activity tied to cryptocurrency is actually down, at least towards the end of 2023, after peaking in 2022. Some 24 billion in illicit transactions or value of illicit transactions still represents less than 1% of total on-chain transaction activity. So is illicit activity using crypto on a downward trend? What steps can investors, companies, and stakeholders take to manage the risk effectively? So today we have invited not one, but two guests, and they're both exceptional. Willie Rondon served for 22 years as a senior manager for the IRS Criminal Investigation Division, and he retired last year. He recently formed his own consulting firm and specializes in financial compliance and crypto advisory services. Brennan Long has more than 25 years of law enforcement and military intelligence experience. He's a retired Navy Reserve intelligence officer, and today he heads up the Law Enforcement Relations Division for Anchain AI, a Web3 security company that provides solutions for investigative cybersecurity and compliance for managing the risk related to cryptocurrency matters. Gentlemen, welcome to the podcast. Good morning.
Thank you. Thanks for having us.
Thank you, Alberto, for having us here.
Yep. Pleasure is all mine, and I'm excited. And normally we only have one guest, but having two is always, the more the merrier is what I always say.
Right.
So I want to dive right in terms of law enforcement. Both of you have extensive law enforcement experience, and I want to talk about what you think are some of the challenges that law enforcement faces today with the rise of digital currency. Let's start off with Willie.
Well, thank you, Alberto, and again, it's an honor to be here with you, with your great expertise in the field and all that. And it's all about balance and diversity, right? I think here we bring someone with your experience from the private sector, me with the IRS kind of financial background, and Brennan with all kind of intelligence, law enforcement experience as well. So I'll speak from my perspective. In the 22 years I worked for IRS, and now in the private sector, trying to do the best on continue the compliance trend that we have. I like to answer your question, first of all, by looking at the perspective of where we were in crypto transaction and risk and where we are right now. And you touched a couple of points about how crime is reducing. That's really what the stat shows, and is due to certain measures and the enforcement that has taken place in taking the bad actors away, right? And I'll tell you, there's still challenges in the compliance aspects of this that we all know. For example, I see this decentralized finance, what's called the DeFi, and the services those offered with the limitations to KYC, to know your customers, to be a big challenge. And also NFTs and products like stable coins and even the CBDC could be challenging from a perspective of KYC. And most recently, we see, and as you well explained it in your introduction, the use of cryptocurrency by narcotics organizations such as the Mexican cartels, right? Where they're using the cryptocurrency as a way to hide their proceeds and be able to, more than anything, move the value of what they exchanging from one country to another without the detection of the U.S. government, which that kind of, it's a wrong statement because they were detected, right? Recently, the J. Announced that big indictment with more than 50 people indicted, but it's kind of like, it is not a wake-up call. I think the industry, the compliance, anti-money laundering industry is very aware about the challenges. I think we're going from not knowing or not wanting to accept crypto as a value transmittal to have rules. Now, I mean, probably we don't have all the rules in place, but we are having some rules. I think most of the financial institutions are either accepted or not accepting, making decisions based on risk, and also transitioning. And if they do want to take cryptocurrency, going to companies like ours to pretty much establish the proper protocols, the proper AML compliant measures, and assess the risk, right, the way it should be. I mean, I look at cryptocurrency like when we were dealing with cash in the 80s, right? There were no rules, there was nothing in place. And then all of a sudden now, going from the 80s to the 2024, now we got rules. So that's how I see crypto from a broader perspective. And I just hope that this dialogue continues enforcing that.
Yeah. And Brennan, let me ask you as a follow-up. I mean, just to focus more on the law enforcement side, on the public sector side, law enforcement, because we'll talk later about government regulation and all that. I know there's always been this sort of narrative around crypto that it's anonymous, but it's not really anonymous. I mean, there are ways that you could track digital wallets and trace, it to bad actors. Could you talk a little bit more about the law enforcement, again, challenges and maybe some misconceptions that the community has or the world has about what really can law enforcement do around cryptocurrency to protect the financial system?
Sure. I think one thing to start with is recognize that, and I always kind of reinforce this, that money laundering has been around for, obviously hundreds upon hundreds of years. And cryptocurrency isn't necessarily the culprit. It's just a vehicle of moving assets. So when you scrape that away, what Willie and I come from is working crime, investigating crime. And so there's always means to move illicit proceeds.
Right.
And so when I'm in a meeting, and I was at FATF back in April, and we had several exchanges and several blockchain analytic companies on one side, and we had reps from various countries on the other. And we talk about, yes, there's a drop in the percentage of what we see cryptocurrency being tied to crime. But one, let's recognize that's what we know of. And two, let's also be aware of, as soon as you take your eyes off of one method of money laundering, I can guarantee you it will increase again. So you always have to keep your thumb on that and keep a pulse on what's taking place. And so in terms of law enforcement, what I always tell investigators, detectives, analysts, whether it's local, county, state, federal level, is money laundering is money laundering. Crypto is just a new technique. And so, yes, there's an anonymous aspect to crypto where obviously we have just wallets and numbers and letters and so on and so forth. And it's public to a certain extent in that you can track and trace this, right? So there are some challenges there, but also recognize that you have to, just like going back to the 80s and 90s, like Willie had mentioned, how do you launder money that from drug proceeds? Well, that same challenge back then of trying to move money through traditional finance, it's the same in crypto. And so you have to off-ramp that somewhere. Mm-hmm. And so we track and trace, we monitor, and our ultimate goal in looking at this is trying to get to a VASP or an exchange that we can serve process to a court order or that sort of thing, so we can try and track that as it gets off-ramped and transferred into traditional finance, right? So those are techniques that we're bringing to the table. It's just educating law enforcement. We're always, regardless of where we come from, we're always a little bit behind the curve. We can't stop innovation, but we can embrace it, right? Right. Embracing that is moving to the next version of financial investigations, embracing that technology, and then training law enforcement to get to that level.
And just let's stay with law enforcement a little bit and look at it globally. Can you talk a little bit about maybe some trends that we're seeing? I mean, I mentioned at the intro, and Willie also mentioned that this, the Chinese nationals laundering proceeds in the U.S. They're currently living in the U.S. for the Mexican Sinaloa cartel. Can you speak about any other trends that you're seeing out there, whether it's geographic trends or other uses that illicit actors are taking advantage of crypto, besides what we've seen kind of out there in the press?
Yeah, for sure. So the one thing that I impress upon, again, speaking with law enforcement in general, is I think personally you're going to see cryptocurrency being used in just about every violation that a department, state police, federal agency works. Right. We talk about, and it hits the news in terms of narcotics trafficking. And you had just mentioned this fentanyl situation. Yes, obviously. And that's a big splash in the news. But when we dig down and get to a local level, you find that it's being leveraged in just about every criminal violation you can think of. PPP loan fraud, fraud in general, scams, drug trafficking, gun trafficking, child exploitation, human trafficking. Again, it's money laundering.
Right.
You're just using a new technique. Right. And so just like money laundering and the movement of illicit proceeds in traditional finance has been around forever, and every crime has some sort of that. It's the same. And so I see 10, 20 years from now where you have a financial investigator on every local, county, state, federal agency level. You're going to have an expert in cryptocurrency. Right. And that's just where the world is going.
Right. Yeah, that makes sense. Anyway, Willie, did you want to add to that?
Yeah, I just want to add two additional schemes that I'm seeing, and they're very popular through the use of the cryptocurrency, and it applies more to investors, right? Not necessarily only drug cartels and narcotics are involved in this crime, but raw pools, for example, on the DeFi protocols is in the project. It's a challenge because you get these projects out there promoting this new token. Hey, there's a new coin. Everybody invests on it. It sounds real well. Social media really helps their case by promoting and protecting that they're real. They really know what they're talking about. But the next thing is they run away with the money, and then the investors lose all their money. And the same thing happened with some of the phishing attacks, right? Right. And a lot of the Roman scams I've seen a lot of that too, where people or elderlies or Roman scams, they're told go to ATM and deposit, the funds, and then the funds are layered through different blockchains, and then ended up in a foreign country where they off ramp the funds. Those are two very particular ones because those are very hard to detect, and really companies need the proper tools and knowledge to be able to detect those and prevent funds for being invested on those.
Yeah, and I think that first example you mentioned is I've seen, in doing research for this podcast, just the amount of scams that exist, and even targeting elderly individuals to invest some of their pension into the new, and latest and greatest coin that's out there, and they're just scamming people out of money. Those are traditional scams that have existed, but as Brennan mentioned, it's just another vehicle to commit crime, to launder money. But scams are very serious, and you see a lot of this activity quite a bit. When you do some research into this area. So I want to talk a little bit about regulations. So the U.S., according to what I've read, it seems to be lagging behind other countries in terms of regulating things like AML and KYC requirements for crypto. The EU, I believe India, Hong Kong, and some other countries have either in the process of developing or have implemented certain rules and guardrails around crypto. I think the EU even requires licensing and registration if you're a crypto exchange. I don't believe you have to do that in the United States. There was recently I think May of sort of last month, the U.S. House voted on a bill that was meant to, I think it was called the Financial Innovation and Technology Bill, some sort of legislation meant to provide some sort of regulatory framework for crypto. There's some dispute about that. I think the SEC came out opposing that. So if you agree that regulations help establish guardrails and protect the financial system, where do you see U.S. regulation heading vis-a-vis crypto? Anyone? We'll start with Willie.
Yeah, so I'll start with saying the regulations have changed drastically over the years. I mean, obviously, I was working in investigations when the AML industry was concerned about not being able to detect some of these transactions, to the point when FinCEN has established, virtual service providers as money transmitters, have issued some guidance and has developed into helping the industry understand better the problem, right? That obviously results in some of the crimes going down, right? Because people have more information. But I do see a lot of regulatory new rules and possibly laws to be implemented, particularly globally. One of the big issues that you have when you transact with crypto is there's no KYC going from one virtual service provider to the other, right? Mm-hmm. It's just a wallet number, which is a bunch of number, right? Mm-hmm. So global not authority, but global organizations such as FATCA has pushing a lot of the travel rule, right? The Rule 15, which is going to establish some sort of similarity to what financial institutions have now. So there's going to be some sort of messaging that it will tell the other institution, this is who you're dealing with, right? Now, that takes away some of the what crypto was created, which was pretty much to stay confidential. So we'll have to see how that goes from that balance, right? Authorities has to regulate, and then the industry don't want to lose what the product it was meant to. So authority has a big challenge because they have to implement laws that only not fulfill law enforcement and the regulatory authorities, but also help the economy to continue a sustainable pace, right? But that I see some changes on the licensing. I see more countries jumping in on board in terms of regulating some of the digital assets providers. I see the compliance rules and the regulation to be more clear, and authorities to work more with the private sector. I see in a big push from the public sector, talking more closely with the private sector, and kind of engaging into what the trends are, sharing those. And I think that's great because you want to comply with the law. You just want to know what the trends are, right? And also, with the fact of the data privacy, we got to understand this travel rule. I think it's here to stay. I think there's huge push for this. And I think organizations, entities globally are preparing to comply with this because it's just going to make crypto more adapted, right? It's going to make it more marketable. I mean, I think if we get the bad actors away from any industry, then the industry is going to be more sustainable, right? That's the way I think the regulations are going to go. And I think we're going to see a lot more regulation coming through.
Yeah, I think, and it's tricky. I think you hit on a point that's interesting, which is, once you start regulating this, and that's fine. I mean, if that's what governments want to do in order to protect consumers, it's going to start to make this more look like a traditional currency and a traditional payment system. But something else will come, right? Something else with the advancement of technology, something else will come. Brennan, did you want to add to that? And then we'll get a little bit into the private sector, which is a nice segue.
Yeah. And again, I always tend to go back in history because it repeats itself. And again, we go back to the 90s and early 2000s where traditional finance was facing the regulations that were coming out, FinCEN and other countries across the world on curbing drug trafficking and the proceeds there. And so let's look at some of the things that were implemented then and accepted. And we look at just suspicious activity reporting, CTRs, et cetera. And back then in the late 90s, financial institutions were seeing this as an overwhelming, time-consuming admin burden to report all this. And today, it's accepted. We get thousands of them submitted every day. Right. And so I think it's just a matter of, almost like growing pains of the industry. You, in order to move to legitimacy, you're going to have this following you. It's just reality. And because of illicit actors, if the world was rainbows and butterflies, we wouldn't have to worry about it, but it's not. And again, like you had said, Alberto, protecting the consumer. And when you go back to our previous conversation about the scans and the amount of money that's being lost, something has to be done. We can't go on like this forever. Right. So I do think it's a move to legitimacy of going through this process. Yes, not all the regulations and things that were put in place in the late 90s and 2000s are applicable, but we have to go through almost like sifting for gold. Eventually, you're going to get through and the nuggets are going to come through and sit on the top. We're going to find an equal balance here where everyone is pretty much happy with the regulations that are being put in place.
Right. And it's let's talk a little bit about the private sector now. I remember maybe 5 years ago, we do a lot of work with financial institutions, and you'd go into the financial institution and look at their policies and procedures, and almost all of them then had a prohibited customer list, which prohibited them doing business with anybody involved in virtual currency transactions because they didn't know about it. They didn't understand the risks, and that understandably so. Today, it's different. Today, there are banks. There are actually digital banks. There are banks that are now accepting this as payments. But there are challenges related to accepting digital assets or customers that are transacting in digital assets. Can you talk a little bit about the compliance challenges from a KYC, from an AML, CFT perspective that are facing not only traditional financial institutions, but any financial institution that's servicing the banking needs in the marketplace? Let's maybe start with Brennan, and then we'll go with Willie.
Sure.
Yeah. So, yes, and in terms of AML program and compliance, what I see from a law enforcement perspective from the last 20, 30 years, and we've talked about what has taken place over these last several decades in terms of money laundering. What I see is how quickly this moves. And so I think when you're a financial institution that wants to bring on and service virtual assets and have a program that deals in that, it's coming up with mechanisms and tools that can help you process these transactions in a faster way. I do think that when we look at wire transfers and transfers amongst traditional finance, again, with regulations in place, it's a little slower paced. And you can verify transactions before they come into your institution. Here, we're not in that environment. It's a lot faster. And so I do see that as this becomes more of a norm, financial institutions are going to have the tools that help them understand that environment a little bit quicker. And that's bringing in tools that introduce artificial intelligence, automate some of this process, automate some of this monitoring so that you're not going out and manually looking for these transactions and where this is coming from across the blockchain. But you're getting those alerts and you're having the tools necessary to, one, understand the ecosystem, and then on top of it, looking what I would say backtrace. Where is this transaction coming from? What's its history? And is it hitting some of these sanction activities that we want to be careful of?
Okay. Willie, anything to add to that?
Yes, I just want to add that it goes back to the principles of what AML is, right? We were talking about regulation, and FinCEN has defined, pretty much the process of assessing fiat currency and transferring to virtual currency. It's considered a transmission of funds, right? So money transmittal type of BSA rules apply. So there's a big push of a lot of new companies, a lot of new fintech companies to come into the market. And they come as startups, right? As in a startup, you don't have sufficient funds to get a business going, right? To make profit, but also keeping in mind the massive number of regulations. So I think financial institution overall has a big challenge to understand the AML rule. And when they come up as startups, to consider that portion of it, because eventually in the long run, if you don't consider not only the federal rules from the U.S. government, but we got 50 states out there and even territories such as Puerto Rico regulating at the state level these financial institutions. So they have a massive amount of regulations to comply with. So bringing on board early in the startup process, the proper AML guidance, the proper AML advising, whatever that is from whatever that company would be, there's plenty of experts out there that could bring them into compliance early on. So once they establish the AML rule, it's going to be a lot easier the process of onboarding clients. And that's one of the challenges that I see on the financial institution. And I think Brennan mentioned artificial intelligence. The process of AML is not only done at the beginning when you onboarding somebody and say, okay, this customer is good. It's a former IRS agent. He'll be okay to accept $1 million every month. So if a company accepts that, what happens after those transactions start taking place? So there got to be some continuous transaction monitoring done. Right. That's where a lot of the artificial intelligence to come into place. But more importantly, Alberto, the institutions, the financial institutions, they need to follow these SARs, right? And this is applicable not only to the big banks, but also these fintech companies that are converting fiat currency, right? There's a lot of confusion on what a financial institution is from a fintech perspective, right? Is the service I'm providing one that applies for FinCEN rule? Does it apply for investing rules? Which one is it? That's what's so important, the regulation, and I think the clarity that the regulators offers, but more importantly, staying up to date, keeping your employees trained, having the proper AML protocol is really what's necessary. So one, for example, a foreign institution will have a better chance to continue and keeping those corresponding accounts with U.S. banks if they have these measures in place. So I think it's not only applicable domestically, but also internationally as well.
Yeah, and I think the other thing that's happening, at least we've seen it, in that the market is what's the word? Self-regulating. So what's happening is there are fintechs, startups that are in the crypto business, but they need to have a bank account somewhere. They have whether it's a correspondent account or just a bank account in a traditional bank, and so the banks are requiring that these fintechs have AML programs in order to manage their own risk. And so, and there's pushback, obviously, but in the end, it seems to be happening where the market itself, now it might not be a requirement, in the US or maybe in the EU it is, but not in the US, but yet it's the market that's dictating and self-regulating. Okay, well, in order to, for us to open your account and manage this risk effectively, we want to make sure that you have the controls in place, that you have an AML program, that you have a monitoring system, and that you know who your customer is. That seems to be happening. I don't know if you guys have seen this from your own, where what you do today. But what do you think about sort of that kind of self-regulating that's happening in the marketplace? At least we've seen this.
Sure. I think for especially, obviously, the legitimate ones that want to maintain legitimacy, right?
Right.
You're always going to have the outliers regardless. And that's no different than traditional finance, right? Traditional financial institutions. When I was at the FATF conference in early April, again, it's was private sector sitting across from representatives of various countries. And one of the FATF asks of these countries is to go out and assess these institutions that are within your jurisdictions and try and assess their risk level and help them, right? Comply with what FATF sees as requirements or recommended requirements. And we're still behind. Right. And it's just again, we're catching up. The governments are always behind in tech and in monitoring and so on, but it's getting better. And they have a laundry list of things to assess what these institutions have for an AML program. What are the other risks associated with them? What are the vulnerabilities? And that's just looking at what I would say the legacy in digital assets, the Bitcoin, and looking at what are you doing to monitor and what's your AML program for this. But again, we're always a little bit behind. So we see as a trend the movement of illicit assets shifting to DeFi. And that adds a whole nother layer of things to look at, smart contract audits and et cetera. So
could you, I'm sorry to interrupt you, Brennan. Could you define DeFi just for the audience? What do you mean by
decentralized finance? Decentralized.
Okay.
Yes. And so where you're seeing smart contracts are being used to, essentially in one way, automate this process and it's decentralized and it's moving in, again, rapidly. And so there's always going to be, we're always going to be a little bit behind, but I do see that this spectrum will get to a point where this is commonplace to assess the risk in these institutions on not only a yearly basis, but if someone is a brand new company in terms of what they're doing to minimize some of these issues.
Yeah. Just sorry.
But I just want to add that some of these financial institutions that deal with crypto has not only, and I don't want to call it self-regulated them, but they have added into their, for example, advisory boards, people that has actually knowledge into the crypto compliance perspective, right? So they help them I would say self-regulated, but I help them get them prepared so when the regulator comes, they have the proper mechanisms in place to be able to justify why they take his customer X, who's a service provider of crypto, or customer Y, who's a trader of a well on crypto transactions, and how they're probably monitoring that the transaction going to sanctions wallet are picked up by their systems, right? So you call it self-regulated, to a certain extent it is, but it's really, to me, it's being prepared to introduce a new product, not different than when a bank or a security company goes into a new product. They got to prepare for that. I see it that way from my perspective. Just be ready for the new product and set up the right mechanisms.
Yeah, and you hear always about regulators using the term explainability to make sure that as they're examining institutions, there has to be a level of explainability that to the new product, the new service that you're introducing into the marketplace, that they're going to essentially buy in, and they're gonna when they do examine your bank, they feel much more comfortable that the product and the service and you really understand the risk and you're managing that risk effectively. So we're sort of kind of reaching the sort of end of this, but I wanted to ask sort of a crystal ball question. I have two teenage sons. I think they both have their own wallets that they keep in their back pocket with their, student ID card and their driver's license. And that's about it. There's no paper money. They don't have paper money. They don't see paper money. Do you guys foresee a world, maybe we won't be around to see that, where crypto is ultimately replacing paper currency and, paper currency that's been backed by central banks and commodities and traditionally? And if so, how close or how far are we from that reality? We'll start with Brennan.
Well, I do think it's interesting. I took a trip about 6 months ago down to Brazil, where CBDC is being accepted, and they already have a system in place to digitally move assets that the country at large has accepted.
Right.
And they are ready as a country. And so it's interesting to not only hear their perspective, but that vibe where they're excited about it. And I think that each country is going to move a little bit at a different pace. You come to the United States and there's still a core of people that love that currency and to feel that in your palm. And that's fine. Right. Yeah. But I do think, again, as CBDC comes around, and which is obviously already being discussed in the United States, the digital dollar, what that looks like, et cetera. Do I think we'll get to a point where there is no hard currency? I think it certainly is possible. I do think there's going to be a core of people that love that, silver, gold, whatever it's going to be. So I do think it's going to become more popular. And in 20, 30 years, it'll be interesting to see what happens.
Well, I think just to add to that, and Willie, I like your comments too about this, but I also feel like currency, as you know, it's used by policy advisors to either inject the economy with cash, right? And so it's as a matter of as a policy initiative to manage economic policy, currency is absolutely needed right now. But again, I can see where my kids, when they're old enough and they're married, or even when they're older than that, they won't be using paper currency anymore. I don't know, Willie, what you think about paper currency versus and being potentially completely replaced by digital currency.
I'm 100% with your statement, Alberto. I learned about crypto from my son, actually, just like you, probably as well. And I think the newer generations are really not afraid to do anything that it makes it more simple, right? The reality is that a wire transfer may take longer. A crypto transaction will take 10 minutes at least. right? While a wire transfer would take days, right? So from a business perspective, from a personal perspective, do I want to transfer money to my business in a foreign country? I may want to do it through a mechanism that is, number one, cheaper, number two, faster, right? Time and cost, right? The number two reason is, I personally perform a study on the adoption globally of cryptocurrency and use some of the top companies that provided this information. And in that exercise, I learned something that it was quite interesting. I mean, not only criminals are using crypto, first of all, a lot of the undeveloped countries that their coin, official currency is unstable, they're shifting into crypto. And why are they doing it? Because you buy a stable coin and it matches the US dollar. When you buy that coin's country, it's going to lose value every day. You don't know. Some of these countries, the inflation is ridiculous, right? So what do? They invest into cryptocurrencies and it helps them move money faster. It helps them stabilize their coin. So I do see cryptocurrency or the digital currencies that the central banks are implementing to be the way to go in the future. I think we just gotta once for all, understand crypto is here to stay, at least for now. Let's deal with it. Let's make sure that we comply with the regulations in place and the upcoming ones, and let's adapt to it at all level. At the government level, you need to train your people and have the right tools to enforce it. At the private level, you need to diversify your products and you need to train your people, make them aware of the challenges, and just be ready for the future. Because, a couple of years ago, we were dealing with prepaid cards. Remember those days, right? And now we're dealing with crypto. I mean, in 5-10 years, who knows what's out there? I mean, I remember when I was growing up as a kid, I was dreaming to have a FaceTime call. That's a normal thing right now. So I think we need to prepare and adapt, and the businesses that don't think about adapting to the trends, they're just going to fall behind. It's my opinion.
Yeah. I agree. I agree with all of that. And I mean, and then going back to, countries adopting crypto, Brennan mentioned Brazil, but I think it was El Salvador 3 years ago became the first country in the world, I believe, that adopted Bitcoin as a legal tender. And that was pretty innovative then. And you're seeing other countries heading in that direction. The Philippines, I was speaking to someone last week about the Philippines. The Philippines is going to now, accept it as a legal tender. And so, yeah, it does, particularly those countries, those underdeveloped countries like Willie mentioned, where their currency is viewed vis-a-vis the US dollar and the value of their currency is tied to the US dollar, just because of the amount of trade that those countries have with the US. But if you could make yourselves independent of that and have a separate legal tender that has its own separate value. I think I see the benefit that a country like El Salvador would see in that. So anyway, this has been great, and I always end every podcast on a lighter note. Brennan and Willie, those that have been following our podcast know that I am a avid fan of music. And I don't want to say all kinds of music, but I'm just an avid fan. I'm a collector of music. And we've been talking a lot about digital currency. And I asked this question last time I had a podcast with somebody, because we also talked about AI, but I'm always curious about the world of digital streaming and the streaming of music. But I'm a fan of live music. And so to me, there's nothing like going to see a band live. I don't know how you feel about that, but I want to start with Willie. Tell me the last great concert you attended, just to put you on the spot.
I actually feel very proud about it. That's a great question, and it makes me very proud because my youngest son, who's 19 now, when he had his first part-time job and make his first $200, he bought me a ticket to go watch Red Hot Chili Peppers here at the Hard Rock Stadium. And I gotta tell you, it's one of my favorite bands. It was a great concert. And more than anything, it meant a lot because it was my son's first paycheck or savings, right? And he invested in Take Daddy to watch Red Hot Chili Pepper. And just the fact that my son liked that music. And I come from a family, we were we were all into sports, right? My dad used to tell me, if you can't play baseball, go buy a guitar, right? So I always saw music like a challenge or a downgrading from sports, right? And to have a son that actually likes music, like Red Hot Chili Peppers and the one I like, it kind of made me very proud. So that's just my comment on that.
That's fantastic. Brennan, how about you? Last great concert you attended?
Well, yeah, there's kind of a tradition. I was lived in Chicago for a long time. Now I'm here in Ohio, and our local community in the summer always has events, and we just had an '80s cover band, so that's always fun. And
That's
my wife
fun.
and I, yeah, and as Willie mentioned, bringing our boys to those, and then hearing them later singing these '80s and '90s tunes. I mean, and classic rock. You can't go wrong with that. So getting the next generation to like the Zeppelin is one way to, make that happen, is to bring those to the '80s and '90s cover bands.
We should make a trade. We learn about crypto. They learn about our type of music.
Right.
There's I agree with both of you 1,000%. So I'll just add my 2 cents to that. I was at the Red Hot Chili Peppers concert too, at the Hard Rock Stadium, and I took my 2 sons to that.
Nice.
And they loved it. I like that there are bands that we both love. And I know there are bands that they love that I'm not familiar with, and it works the other way as well. But the Red Hot Chili Peppers is one of those bands where, I instilled in them from very young, this is a band that you need to know, and it just resonates with them. And also talking about the '80s, I mean, '80s music to them, it's funny. They call it, old. It's kind of classic rock for them. It's like oldie music is '80s music, and so they like Joan Jett, and they could listen to whatever, all the '80s rock bands. And lastly, Zeppelin. My son, who plays guitar, has a Zeppelin poster in his bedroom.
Nice.
But his favorite guitarist is Jimi Hendrix. He has a Jimi Hendrix bobblehead. He has a Jimi Hendrix painting. He has Jimmy, because as a guitarist, that's who you look up to, him and Jimmy Page. But Hendrix inches a little bit above Jimmy Page. But classic rock is, it never dies.
There's a great documentary on Hendrix. I can't remember what streaming channel it's on, but an amazing life, really. And a genius, when you think about it.
And gone too soon, right? Gone too soon.
Right. Absolutely.
He didn't survive. But anyway, guys, it's been a pleasure talking with you this morning. For those who are watching and listening, please, if you liked what you listened to today, as always, please subscribe to the link below. It's been a pleasure to have Brennan and Willie as our guests today. And please stay tuned for the next podcast coming soon from Integro Talks. Thank you.